Welcome to Common Sense Investing. My name is Cameron and you're watching another video on some of the best microcap stocks out there, some of the best penny stocks on the market. As usual, I have another weekly presentation for you. I'll go through my presentation. Feel free to hit me up in the comments, troll me, say I'm wrong, say I'm right, whatever you want to do. I normally go through my presentation and then at the end of the presentation, I will stick around for questions, concerns, comments, or just to chat. This should be a pretty good video, I hope. And I hope everybody's doing good on a Monday evening. It's been a wild weekend in politics, and Monday was a wild day in microcap stocks. It's really hard sitting here thinking about what I was going to discuss in today's live stream. I don't have a specific stock I want to talk about, so I just started building a presentation. This might be a little bit random as I go through some of my top stocks, introduce a few others, and just have some fun with it. And I hope you're making money in the microcap market, because some people are making money right now and some people are not, which is what makes it so confusing, a little bit crazy. Looking at this, I put this out last night, so basically for today, I kind of predicted what was going to happen today before I even knew it. Talking about volatile markets can be fun to watch and create opportunity. I was watching California Nanotechnologies rocket to the moon on Friday, and shareholders saying that it's a bull market, while Z-Test shareholders are saying bullshit, it's not a bull market. They've been going down. So are you supposed to buy the stock that's up 150% in 2 months, or are you supposed to buy the stock that's down 38% in 2 months, right? What do you think? And I know it's hard to see right here, but California Nanotechnologies in the 1 month chart is up 150%. The 1 month chart, I think, for Z-Test Electronics is down about 38%. So it really does become, if you like both of these stocks, which one would you go for? Do you buy the stock rocketing to the moon and just wait for a dip? Or I know people say that you shouldn't dollar cost average down. It's better to buy on the way up. Which one do you do? California Nano, or do you go with Z-Test Electronics? That hasn't even been covered on my channel yet. These are my top stocks that I tend to talk about. I haven't really added anything to the list recently. These stocks have been doing so well. I've got a bunch on my list that are kind of cheapies with a chance that I'll talk about at the end of this video, but there's a lot in here that I'm going to talk about. This list hasn't changed much recently, except I think about 3 months ago, I added Payfare, right? And that's quite a volatile stock right now. So in trying to figure out what I was going to talk about today, I'm going to explain this a little bit more at the end of the video. And what this is, it's July. We're 7 months in now, basically, to the markets. This was my 2024 Canadian stocks video. I had to pick 5 stocks. I do this every year. It's just like a benchmark for me. Not trading in, not trading out of stocks. Just picking 5 stocks, sticking with them all year, and just seeing what happens. And in these 5 stocks so far, Kraken Robotics is up 87%, Well Health Technologies up 25%, Gatekeeper Systems up 57%, Enterprise Group up 48%. Pretty good returns. Unfortunately, right now, Game On Entertainment in my number 5 spot. My number 5 spot is always like a high risk, massively high risk, tiny little penny stock. This year it was Game On Entertainment. Last year it was Current Water Technologies. It went up to 20 cents, but now it's down to 7 cents. So 37.6% so far this year. Well, what I'll talk about a little bit more at the end of this video, if you look at a diversified portfolio, if you take all the stocks that I've covered on my channel so far this year and added up the ones that I've been quote unquote bullish on, at least in my Patreon Discord, it's actually doubling the returns of my top 5 stocks. So you can see how like a diversified portfolio can can really actually improve your return sometimes over just picking 5 stocks, right? Now, keep in mind, this is not financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. This channel is just how I invest, not necessarily how to invest, and I can make mistakes. So make sure when I'm talking about stocks, this is just a discussion. I just want to have a discussion about microcap stocks, right? That's it. And basically, it's just my opinion. My opinion can be flawed. It's just my opinion. Make sure you go do your own research and figure out your own opinion on these stocks. Going through my top list of stocks to start, at least with some of these, Kraken Robotics finally on, a lot of volatile markets lately. It's finally starting to trickle up to what I consider fair value. It's not exactly a rocket ship up, but it seems like every day or two, it's up a percentage or two. One of the main things is like they haven't had a lot of news releases, but one thing with Kraken Robotics is just article after article of tailwinds in this industry and the good financial successes that Kraken Robotics has been having recently. Like a lot of the times in stocks with companies, success can breed more success. And that just seems to be what's happening because, so many tailwinds in this industry here. We're talking about the indispensable ingredient for victory at sea, defeating sea mines, right? Part of what Kraken Robotics does. And then, of course, simply Wall Street overvaluing everything, but basically talking about how Kraken Robotics is finally in a position with making some cash and making some earnings that we could look at them. And when looking at Kraken Robotics, they're undervalued according to Simply Wall Street. So just over and over, good news for Kraken Robotics, even if it's not directly coming from Kraken Robotics. So that's great, right? Well Health Technologies, I don't talk about them a lot lately. People got tired of me talking about Well Health Technologies. They've been in my top 3 stocks for the past, I think, 3 years now at this point. Finally going up a little bit, right? $4.86 Canadian. Now, one of the things I talk about here on Wolf of Oakville, the wolf says, look for red flags not to invest in a company with more vigor than looking for green flags. I basically say in these tiny little microcap stocks, if you can't tell me at least 5 red flags about a stock, then you haven't done enough research. I know a lot of the times people come onto my channel or talk to me or email me and they're like, well, I want you to look into this stock. And I'll say why, and they'll give me some reasons why I should look into it, but then there's no reasons on why I shouldn't. Like, if you don't understand some of the red flags, then really it's hard to consider your research done. Now, I bring this up with Well Health Technologies because obviously, share price is going up and that's great, but keep in mind this company has a lot of minor red flags still. I basically call it death by 1,000 cuts. In saying that, it's still one of my top stocks. And recently, was it today? It went up to $5.02 for all of about 15 minutes. And just when we think, people start celebrating and getting excited, it's finally up over $5. Back down at 486.45. It actually started the day at like 485 and closed the day at 45. Absolutely crazy for Well Health Technologies, but they're quietly putting out good news, right? They recently had this announcement, this $44 million project, I believe is about $15 million of funding from the feds, and this is working on digital healthcare in Canada, of course. Right? And I asked the question, how long until Well Health owns the majority of health clinics in Canada? How much is that worth? Right? Now, there's a lot of speculation involved in that, but at the end of the day, this is still one of my favorite stocks, even though I don't talk about it a lot. And interestingly enough, for me, talk about conviction or, picking or timing the market. I put this out on April 22nd, 2024. I said, Well Health Technologies is surrounded by fear and negativity right now. I love that. Putting it on the record today, April 22nd, that I'm more bullish than ever. We'll check back on this post sometime in 2028. Well, of course, I'm a little early, right? But share price has gone up, so it's nice to celebrate a little. April 22nd, Well Health Technologies was at $3.50 Canadian. So now it's at 486, and today it went up above 5. So that's pretty good. And this is me ranting because, again, for Well Health Technologies, if you need to believe the investing thesis or you want to believe in Well Health Technologies, typically you're looking at revenue growth. Unfortunately, we're in a risk-off year where nobody really cares about revenue growth. Everybody's looking for earnings growth, and that's why you get this massive volatility in share price with all their minor red flags and some of their concerns around conversion. But at the end of the day, today, go take a look at Well Health Technologies. They're starting to get a little share pressure up, right? It's finally good to see. Is this company finally going to, explode through their, resistance and see where this stock can go? It'd be nice to see that someday. Gatekeeper Systems, right? This is one of my top stocks, one of my favorite stocks. Earnings coming out probably soon, end of July, hopefully for Gatekeeper. And hopefully we'll have their CEO, Mr. Doug Diamond, on again after earnings. Now, Gatekeeper does this a lot. Up again before earnings. Earnings are still not out for probably a couple weeks, but we're getting some nice share price growth on really no news. And Gatekeeper, I think, is close to or has wrapped up kind of the trade circuit for June. So I wonder if that's it there. If people are getting excited about earnings and they've spoken to enough people in the field that it kind of correlates the timing here with, some improved stock performance. Hard to say, right? Typically out on the trade market circuit, they're trying to market the company and their products and trying to get those sold. But you never know when you run into investors that start to get interested, larger money investors, things like that. But it's good to see Gatekeeper System was kind of hovering. I was happy with it hovering around 62, 63 cents Canadian there for a while. That was a fine share price while we wait for earnings, but seems like it just wants to go up again prior to earnings right now. What hasn't been going up is Enterprise Group, which is a little strange, right? This is, again, one of my top stocks. I think it was in my number 4 spot or something like that. Down again today, and down pretty substantially, right? 3.3%. It's not like it's dropping 0.5% or 1%. That's a fairly decent drop. Now, it's interesting for me to look at this right now with Enterprise Group. It's almost perfect timing. I made the finding the next 10x penny stock video a while ago, and I've been kind of flashing this slide all over the place. And I've added something to this slide where I talk about, revenue trending up is what we're looking for, earnings trending up, cash trending up, also ROIC trending up. And this is kind of a new ad right now to my channel that I'm testing out. And this comes from data from Ryan Telford that I've been starting to factor into some of my stock picks and see how it works, as well as valuation trending up. And I'm going to have a video explaining ROIC a little bit better coming up soon. I've already got that in my Patreon, but I'm working on a public video. And one of the things with using this investing technique, looking at revenue growth, earnings growth, and combining it with an improving, not a great ROIC stock, but a stock that's improving its ROIC numbers, can deliver exceptionally high returns. And when I look at all the stocks on my channel, if I am just using this ROIC method, where ROIC is one of the major factors that if you can transition it into high earnings growth and high revenue growth, you can really get a great 10-bagger stock. I would suggest right now that Enterprise Group should probably be one of my top stocks, like my number 1 stock. Right now, they probably have decent revenue growth, decent earnings growth, but as far as return on invested capital, they probably have the most transparency, right? Get money, invest in Evolution Power products, put those out to rent, make more money, make more revenue, make more earnings, take that cash, buy more Evolution Power products, put those out to rent. Like, it's this easily transparent cycle of how they can get amazing return on invested capital that's just going to fuel their revenue and earnings for hopefully years to come. So if I'm just looking at that one strategy, I really should probably be moving Enterprise Group higher up on my list. Unfortunately, for some reason right now, it keeps moving down shareholders lists because it keeps getting sold off, and the lower it goes, the more interested I get. Speaking about the lower it goes, the more interested I get, ADF Group, everybody's darling just a month ago. It's amazing how things change so quickly, and I don't know why. Sometimes I find them probably one of the only platforms that loves fear in the stock market, as long as it's not something to do with financials and earnings. If it's a non-business related fear, I generally love that. It generally makes me more bullish on a company, mostly a stock, because what you see is you get the same great company that was always there before. You get some kind of fear online through social media that's really non-business related. It drives share price down. So you get the same great company at a lower price. And this is stuff, simple concepts that, people always regurgitate, that Warren Buffett quote, and I'm not even going to say it, but people always say that they're going to do that and then they don't do it. What's been happening with ADF Group is a large seller, has been dumping shares. Now, we don't know why. We can all speculate. People have speculated it's got nothing to do with whether they like ADF Group or not, or they've speculated it's got everything to do with ADF Group. As far as I know, information I have, we just don't know. It's all speculation. All we do know is that there's a large seller who's out there seemingly almost every day that is selling shares of ADF Group. And that has dropped the price down from this little peak that they had for all of a millisecond. I think it was $20.50 Canadian. And now they're down getting close to around 14 bucks. And there's people out there screaming that this is cheap. Please go do your own research. I'm not looking at the numbers today. I think I've had 2 different live streams looking at the numbers of ADF Group and the potential opportunity there. You either love this stock or hate it, but please don't panic buy it or panic sell it. Make sure you look at the valuation, look at the long-term potential or not, depending on how you see this stock, and make the best decision you can. People are panicking a little bit more with NTG Clarity Networks, and that's reasonable, right? Smaller company, right? Less established. It's really rocketed up this past year. So obviously, we get these volatility here, all the volatile share prices through here with NTG Clarity Networks. It's actually holding up pretty good, right? Down 3% today. We're getting the volatility in the markets because it's summertime. Typically, it's kind of some low volume. And it's doing good though, because at the end of the day, like one of the things I'm worried about with these small companies, especially ones that were probably getting swing traded a little bit in the past year, is that their earnings are a little ways off, right? NTG Clarity Networks, I have their Q2 earnings somewhere around August 27th. It's one of the later ones on my list. We're still a whole month plus a week plus some until their earnings. So even though it's one of the later earnings for me right now, and even though it's the middle of summer, yeah, it's going down a little bit, but it's holding up pretty good. I got no problems whatsoever with NTG Clarity Networks. Just a nice test of patience. Symmetrix, another company that says, bear market. What bear market in microcaps? Look, that's a 6-month chart for Symmetrix. It's done nothing but go up. I think this was Q1, and their Q1 wasn't very good. And they have Q2 coming up, and I don't expect Q2 to really knock anybody's socks off here, right? I don't think the numbers are going to be great. The CEO called for 30% revenue growth. I think Q1 had about 18% revenue growth, so it didn't quite meet my expectations. We'll see what comes in here with Q2. That'll be coming up. But it doesn't matter right now for shareholders. Share price keeps going up. So even though Enterprise Group down 3%, NTG down 3%, Symmetrix is up 4% today, and strength now for months and months and months. Now, partially that's due to people speculating. Symmetrix announced the uplisting to the TSX, and they have a new ticker symbol. So it's a good thing. Some of these stocks, I just talk about their ticker symbol all the time. I don't even know the name of the company. So it's a good thing in this case that I keep calling them Symmetrix. But this one has surprised me. This is a good indication for long-term buy and hold investors. Probably return better than trying to trade in and trade out. Because I'll be honest, like this dip here and with their Q1 earnings coming out, I thought this one would start trickling down a little bit. We'd be talking about Symmetrix in the 36 cents range right now. And it's not. They're doing exceptionally well. So congratulations to shareholders. It's in my top stocks. Has been for a while now. That's awesome. This one is recovering, OneSoft Solutions. So recovering because it was here at its peak at around, I think that's 92 cents Canadian. It went all the way down to like 62 cents Canadian recently, and now it's back up to 70 cents. Now, one of the reasons I think people are starting to read, and that's interesting because I pointed this out last month when this came out. I thought this was a really underappreciated news release for OneSoft Solutions. Their share price going down, I totally get it. This is a company, this is a stock that was valued quite high. And one of the problems with being valued quite high is that if you lose investor sentiment, if you do something to lose investor sentiment, and in the case of OneSoft Solutions, it was probably a lot of, unexplained share-based compensation, when that's going to stop, how much more is coming, that kind of questions were starting to come up. Share price went down from 92 cents to 62 cents. I feel like that was almost valid, but it's good to see that, people are starting to come back. They're still paying attention to this company and they're reading these news releases. I'm not going to sit here and talk about it Go read it and see what you think it means to OneSoft Solutions, because this is a long-term hold. You need to remember that. This is a company trying to change the pipeline industry for probably the next 15 years. So they've had some good news, and share price is starting to show it. Payfare. Love talking about Payfare. Nobody else does for some reason, and I understand why. You know, it always takes patience, because here's the thing. Can I go back? Can I go back? Can I just pause, hold, pause? You know, a lot of these, like when we look at California Nanotechnologies, one of the things to look at the chart, yeah, it kind of went up for a while, right? But, you know, it really went up quickly in the past week or two. A lot of the times these microcap stocks, you can't go back and invest in hindsight. You can't just change your mind unless you're basically a day trader and you have the time and you're watching every day and seeing what's happening and projecting out the technicals. Really, you can go to catch these. But again, look at Z-Test right here, right? Quick, one day, it went up from like, what, 8 cents to like 23 cents, 22 cents, something like that, right? Quick moves. Typically, this is based on research, trusting your research, reading, doing your due diligence, right? And then having patience. And then all of a sudden, you know, you pick the right company at the right time, they get a little bit of luck, and it rockets to the moon. So it's always interesting for me that people get so frustrated so quickly, right? ADF Group, frustrated very quickly. You know, it was a lot of people talking, it's a good buying price at $15, $16. Now it's down to $14. People are already panicking. And then we get to like Payfare, right? We had the trading halt. It did absolutely nothing, obviously, for quite a while because it was halted. And then the halt releases, and I never expected to rocket up to the moon, because I thought people that were upset about this, their trading halt, would go to sell, and you're going to get some large sellers for a while. And I said, look, it's going to be slow growth and it's going to be volatile, and that's pretty much what we've seen so far. Today, Payfare is down $6.14 Canadian, down another 1.76%. It was up a little bit more a little while ago. I think it was $6.26. Either way, it's been pretty slow, and this is what I'm looking for. Now, when do they report earnings here, Payfare? Early August, the first week. I hope they report some good news with earnings, because something's got to change. I'm not going to talk too much about them, but what I am going to put out with Payfare here is this is what we're used to. And this is what I'm talking about, why share price for so many of these stocks are volatile in the summer. You get low volume, you get small share purchases, meaning a stock can be very volatile up or down and move on very low volume, where it doesn't take a lot of money to move share price up or down. And that's what we're used to seeing right now with Payfare until about today. I've never noticed it before today, but look, we're getting some buyers, and I can't say for sure that these are institutional buyers, small funds, or anything else like that. But you could see here, 1,700 shares, 1,400 shares, 3,000 shares from Anonymous. That's a large purchase right there. Right? What is that? $37,000 Canadian in 3 buys from Anonymous. That's a lot of money, right? Even if that's not an institution or a small fund, that's a large investor. We got a 1,400 share purchase here from TD Securities. Again, we don't know if it's TD or just somebody with TD. And look at this. That wasn't it for today. We've got a 1,500 share buy, 2,000, 2,500, 2,300. This is not normal for Payfare. This is normal for Payfare. 100, 100, 100, 100, 100. Same with Well Health Technologies. Same thing. This is what I'm waiting for Well Health Technologies, and they really haven't been getting it much. Not that I've noticed, but this was Payfare today, and they moved from, 10 shares, 100 shares, 300 shares, small purchases, to now they're getting these larger buys. And I have to wonder, is something changing slowly here for Payfare? Go take a look at the technicals on Payfare. Make sure you're paying attention. Go take a look at their fundamentals. Make sure you use your calculator, right? Don't throw this one in the garbage yet. Because like this one I was just talking about, I just could have just came to this bloody slide. It would have been a lot easier, right? You get this for a long time, and then you get this, and then you get this, right? Now we're sitting at $1.02 for Cal Nano, and of course that's well deserved. 1,863% increase in net income. Now we all know that this isn't going to last until Q2 because in their Q1 they did have some one-time off revenue, I believe. Go check that out. So not every quarter is going to be 1,863% increase in net income, but still that was enough to get attention. That was enough to get noticed, and congratulations to California Nano shareholders, right? The interesting thing for me sometimes, speaking of California Nano, is Beware Holdings. And I always say on my channel, if you want to build a good portfolio, typically you can go look at the videos that get the least amount of views. Now, in this case, I probably shouldn't say that because I do have Kraken Robotics sitting right here, right? Obviously, I'm pretty bullish on Kraken Robotics, but it is interesting for me that, I can throw 10 Canadian random stocks at you, and this will get a lot more views than like, hey, here's this already good company. I'm going to show you their earnings, and you could see how that gets so many fewer views than some of my other videos. And it's so consistent on this channel that a lot of the stocks with low view counts seem to be the best stocks. The boring stocks that nobody wants to talk about, nobody wants to watch a 15-minute video on, right? Too much time. Beware Holdings up 11% today, 50 cent Canadian, right? 6-month chart, really strong here. Boring, lame, right? This is the type of company that really does fantastic for this channel. Congratulations to Beware Holdings shareholders, right? Just keeps moving up. So those were kind of my top stocks. Let's look at a couple others here that's interesting. One of these that I'm going to get to here, SCI Engineered Materials. The reason these are off to the right, these aren't really my stock picks. Atlas Engineered Products, right? Small Cap Discoveries, Thermal Energy International, Small Cap Discoveries. And Beware, I've been covering them for a while, but I don't think there was necessarily much. Like a lot of these are Small Cap Discoveries picks that I ended up just kind of covering on this channel. So I'm never going to claim that these were really my picks. VersaBank was somebody in my Discord. Hamilton Thorne really hasn't performed well, but that was a Small Cap Discoveries pick. This one way down here is only on this list because it's a US OTC stock. And not a lot of views, not a lot of people care about this company, so I've got it over here to kind of weed it out from my main group of stocks. But don't miss out on researching this company. I just spoke with them today. I hope to continue speaking with them. When I first covered them, they were at $5.25. They're now up to $5.93. They got a nice little spike here, and that was due to this manufacturing agreement with Battlesite Technologies. And if you go look at this company, very frugal, steady revenue growth continues to turn into good earnings growth. Go research SCI Engineered Materials. In fact, they're very, very, very similar to California Nanotechnologies, right? So if you're looking for the next Cal Nano that could be undervalued, go take a look at this one. And weed stocks, cannabis, I should say cannabis. Cannabis stocks, right? Remember how these were going to go through the roof for everybody? It was going to make everybody money, and then it went down. And now what we're into is this. I think this year a lot of people are having trouble looking or finding value. And I mean value as far as not just cheap, but I mean value in finding GARP, basically a good company at a reasonable price, good growth at a reasonable price. That's harder to find a little bit this year, depending on what your investing strategy is. So one of the things I think some people are doing are looking in some beat up sectors. I've been doing it for sure. One of the things I know Small Cap Discoveries has been doing has been also looking at a bunch of weed stocks. That's why I haven't been covering very many of them, right? This company here I wanted to highlight, and I'm going to show you two cannabis stocks. SSC, they project record quarterly gross revenue during Q2. So this is their Q2 2024 guidance. They're projecting about $4 million. In their Q1, they had 3.1 million, so that's pretty good growth. Growth rate of 28% per quarter. What company is this? Simply Solventless Concentrates, hash V. And I just wanted to point it out. That was another stock that performed pretty well today, up 4.54%. And if you look at the past year, right? up from, what is that, 12, 13 cents up to 33 cents. So they're performing quite well for a cannabis stock. Hash.v, right? Enterprise value 19.77. You know, price to sales is looking pretty healthy, but EV over EBITDA still looks okay. Go do some research on Hash V if you're looking for a cannabis stock, right? Another one I want to point out, this one's a little bit more weird and very much a contrast to Simply Solventless, because Avant Brands, am I saying Avant Brands? Avant Brands? I don't even know how to pronounce it. But anyway, this was the only Jeremy Lefebvre. Does anybody ever watch Jeremy Lefebvre Financial Education? This was the only stock, pretty much the only stock. I don't know if I want to talk about the only like small cap stock. This was basically the only stock that I think Jeremy picked that was okay. I previously covered it probably about 2 years ago. It was about 30 cents or 40 cents, something like that. Didn't love it, but it was okay. As far as like a microcap stock goes, it's not the worst one, right? They just reported earnings today. Again, record gross revenue, generated $9.4 million in gross revenue. New company record, strong international growth. You know, Simply Solventless was talking about 28% growth. At least international here is 26% growth. $4.6 million in cash, record cash flow, right? Talking about sustainable and growing cash flows. Record adjusted net income, $1.4 million for Avant Brands. So you think, okay, that seems like some pretty good earnings. The stock should be going up. It's done nothing but go down in the past year. So you can see here probably about 22, 23 cents here. This is in Canadian dollars, I believe. And now it's 6.5 cents. We'll see if it pops a little bit tomorrow, but if you look at the contrast to Simply Solventless, right, that's at least a lot cheaper. The enterprise value over EBITDA isn't, though, so it's something that I might go take a look at probably in the next week or two. I might go take another look at Avant Brands, just looking at some of these cannabis stocks that are maybe beat up, because when I see those earning highlights, you know, those look pretty good and the share price really isn't up very much. So if anybody's a shareholder or looking at Avant, let me know, hit me up. But make sure if you're investing in these cannabis stocks or any of these, you know, high risk microcaps, at least consider a stop loss, especially with some of these stocks. Absolutely fascinating. I don't intend to cover these stocks every week. They just keep popping up. And the reason is, this is my beat up list. This is my cheapies, kind of cheapies with a chance, if you call it that. These are stocks that were beat up, and I'm looking for a quick valuation play potentially, maybe looking at them long term. But at least right now I can look at these companies and say, they're significantly undervalued. If they can get one or two pieces of good news, one or two catalysts, then they could, you know, increase in the next 2 years in valuation and people would make money. And talk about a roller coaster ride, because every week we get this. One of them's down 9%, one of them's up 9%. Last week, one of them was down 12%, one of them was up 12%. There's no clear winner. Every time one goes up, another one comes down, and it's never the same stock going up every time, right? So it's a fascinating list to watch. And the reason I watch this list is I do believe that one or probably two of these companies, two of these 5 stocks, will probably make money for people in the short term and maybe the long term. I just don't know which one at this point, right? I don't have enough information. I covered Quip Medical at $4.21. They're still at that price. I covered Zoomed at 18.5. They're still at that price. I covered Sabio at 25 cents. They're still at that, right? None of these have moved ever since I've covered them. I think Eager was at 80 cents. I think it's down a couple pennies since I made my video on them. But that's only because of today. I bet tomorrow it's back up to about 80 cents. Basically, at the end of the day, I made 5 videos all that time, and not a single one of these stocks has moved in share price. I do still think that one or two of these, though, is going to make people a lot of money. But I mean, that's why I'm coming back to this. And I'm seeing a lot of this, right? I'm seeing a lot of people over concentrate maybe in stocks. And that's a tough one, because I do typically say that you should probably only invest in the number of stocks that you have time to research, that you have time to monitor, so you can at least check every 3 months to see how they're doing, right? Watch their earnings and see how they're doing. One of the problems I'm finding, though, is when people do kind of over concentrate their portfolio, They also over micromanage. I find people buying, selling every day, every week, changing their mind. Some article will come in and it'll be good and they'll go and buy. And then another article or some opinion will come in the next day and they'll go and sell. And you're getting this constant panic buying, panic selling. Be careful of that, please, right? Be careful of that. Like typically when I build like a concentrated portfolio, it's typically a buy and hold. Like this one is for the year. Now, I'm not saying that's the best thing to do either. I'm a buy and pause investor. I reevaluate every 3 months on earnings or with any major news that might change things, right? Like would I have maybe sold Game On Entertainment on its way down from 20 cents? Possibly, right? I don't know if I would have held Game On Entertainment from 20 cents all the way down to 7 cents. You can make some changes in your portfolio because Game On Entertainment also didn't report their earnings. They were like 7 months late. Game On Entertainment actually just reported their earnings like last week, right? That's fantastic. I'm happy their earnings are finally out. But you know, that's not something that I might have held through. But at the end of the day, what I'm looking at here is that a diversified portfolio, basically a buy and hold stock, seems to always outperform a somewhat more concentrated portfolio that you really can't touch, right? And this one's a bit more flexible because I adjust this one basically on whether I'm bullish or not on a video. So I get to adjust my portfolio every 3 months basically, and this one I never get to adjust. So the adjustable portfolio is almost doubling the performance of my static portfolio, if that makes any sense. So, yeah, the year's not over, right? Game On Entertainment might start shooting up and I might have a different tune later on down the road. But right now, being able to adjust my portfolio every 3 months is doubling that return. I think that's pretty important, as well as, you know, it's a little more diversified on this side. This is every company that I've covered in 2024, where this one is just these 5 companies. So very interesting. And one of the big differences is on this side, I don't capture ADF Group, Cal Nano isn't on this list, NTG Clarity isn't on this list, right? Whereas on this side, I can add these stocks to that list, and that's why the returns overperform. But anyway, that's just a little bit of rambling at this point. Presentation over. Let's see if there's questions, concerns, comments. How's everybody doing? Let's move this over. If you just were watching for the presentation, it's over. I appreciate your time. Thanks for watching. You've been watching Common Sense Investing. Other than that, let's see if there's comments. You will be surprised by Zoomed V earnings growth. Yeah, that'd be nice. I like Zoomed, honestly. It's of those 5 stocks, I mean, it's really crapshoot as to which one is going to be the best performer. Well, it's tough to say in my opinion. It seems to change every day. I do like Zoomed. Zoomed is at the top of my list of my beat up, of my cheap stocks. Zoomed and Sabio Holdings are probably my 1 and my 2 picks, although I really love Aurora Spine. At the end of the day, it's probably not the smartest choice because Quipt has like an amazing amount of cash. So, I mean, again, the stocks for me aren't necessarily the stocks for you. I try to provide information, discussion, opinion. We talked about this on the Patreon this week. You know, everybody's investing style is different. There's, you know, probably 50 different major investing styles out there. And within all those major investing styles, there's probably 50 different micro styles under each one. Depends on your age, your risk tolerance, your timelines, how much time you have. You know, it depends on so many factors, both macroeconomically of where you are in your life, as well as like yourself personally and your experience and your personal, you know, tolerance with some of these stocks. There's so many variations. So all I'm trying to say is that a stock for you isn't necessarily a stock for me, and a stock for me isn't necessarily a stock for you. But I am happy to create great discussion around some of these stocks, right? Like Hammond Power Solutions, didn't even look at them this week. Don't know what's going on. Are they going up or down or what's going on? They were going down for a long time, probably due to capital gains tax sell-offs, but what are they doing now? I have no idea. They are one of Canada's darlings, right? So it's important to trade with conviction, which is why you can't tell me that Royce isn't pronounced Roic, like heroic. My ears are unavailable to such baseless propaganda FUD. That's fine, right? I just said that a stock, my stock isn't your stock. I call it Royce. You can call it Roic. I'm fine with that either way, right? I don't know why I call it that sometimes. Just the way it goes. Potatoes, potatoes. At the end of the day, does it help your investing? That's the question. That's the test that I'm running through here, right? I spoke about this week as well, where with return on invested capital, I've always done this qualitatively, right? I've looked at a company and been like, okay, you look at Enterprise Group, like I was talking about, very, very transparent how they can take money, reinvest that money, and get a return on that money. I can look at that qualitatively and say, yeah, this is a good return on invested capital for this company. I think it's going to grow. It's got high growth. You combine that with their Evolution Power products. I like Enterprise Group. I've never looked at these numbers before for return on invested capital because with microcap stocks, they're massively volatile. They're very inconsistent, right? You got to put it on trailing 12 months and really you're looking at a trend. But when Ryan Telford pointed that out, like, don't ignore that. Just watch the trend. That's all you're doing. Watch the trend. We're not saying that a good return on invested capital number is you should be 50% or higher, 20% or higher, or 0% or higher. That's not what kind of I'm looking for through Ryan's data. I'm looking for improving return on invested capital numbers, and that's it. And basically what I'm trying to do is put what I've been doing qualitatively for a long time into a quantitative analysis, right? And just see what happens. So I'm not saying it's going to work. I'm just saying I'm giving it a try. Lost Landmarks is clapping for something, probably Kraken Robotics, because why not clap for Kraken Robotics? I love Canby, C-A-N-B. It's a profitable cannabis stock that provides value-added products. Their P/E was criminally low, and then it bounced up 4x and is now back to where it was pretty bounce before the bounce, I'm sure. Loading up. Interesting. I will take a look. I haven't looked at cannabis for a while. I've been letting, small cap discoveries go through those stocks, but maybe it's time to slowly get there, right? I'm basically trying to use... Right now, what I'm trying to do is use this time. This is when people get bored. This is when people panic and they just watch the same stocks and they overmanage those same stocks because you have the time. Really, I think anyways, I've been using this time to research as many companies as possible. I've got about 8 new stocks on my research list I'm going to get to in the next couple days, I hope, right? And every minute I'm just trying to stop watching Well Health Technologies share price, Cameron, and go research a stock, right? And if you're doing the same thing and you're panic selling or panic buying your stock because you're watching it too closely, go research some stocks, at least in my opinion, right? There we go. Pre-bounce. Yeah, that was pre-bounce. Little typo. That's okay. We've disagreed before on diversification. I think diversification is very underrated. During cyclical microcap highs, sure, but when money's absent, you can't predict who's getting seen. Yeah, it's interesting, right? And I'll probably have more comments at the end of this year. I've typically preferred concentrated portfolios. Typically, I've talked to great microcap investors, some microcap investors that are doing this full time. This is their career, and most of them will hold between 6 and 10. Sometimes a little bit more, but typically when they're holding more than about 10 stocks, we're talking usually starting position stocks. Typically, if they're holding more than 10 stocks, it's because these are coffee can stocks. These are stocks they don't watch anymore, right? Once a year, you look at the earnings are good, put it back in the coffee can. If you're looking at like newer stocks, new positions, 6 to 10 is what a lot of the full-time investors have been doing. I've been doing that as well. I do find it interesting that this year and last year, I've got some data from last year as well that shows that basically the more diversified portfolio is outperforming. At the same time, I will have to look at the data at the end of the year. Is it outperforming because it's more flexible and I can add stocks every 3 months versus my other portfolio, which is static? Or is it outperforming because it's diversified? And there's an argument for both, right? The flexibility is great because you take a stock like NTG Clarity Networks. I threw that on my top stocks list. I think it was in January. I think it was at Christmas. And I actually did that top stocks video at December 19th. And then I put NTG Clarity on my top stocks list over the Christmas holidays. So that made it onto my 2024, list, but not my top stocks list. So anyway, is it basically the diversity? Should you be rebalancing your portfolio every 3 months? Is that what that portfolio is showing us? Is that why it's outperforming? Or is it because of the diversity? Because again, it's hard to predict California Nano, right? The CEO for Cal Nano said that Q1 was going to be a record quarterly revenue and earnings. We knew that. That was telegraphed. I covered their full year 2024 earnings, but we didn't think that record quarterly revenue and earnings was going to be 1,800%, and we didn't think that it was going to rocket the share price up 2 or 3x, right? So it does help to have that diversified portfolio, which catches things that you just don't see coming, right? As much as you can see it coming, and we read it and we knew it was going to be a good quarter, and Cal Nano was on my top stocks list, it's hard to predict every week what's going to happen with a stock, right? Been following Avant for a while, long in Avant. Not bad, but high share count. Should look into high T.V. Okay, I'll take a look, thanks. It's interesting because, I looks like decent numbers. And look, I just looked at the bare minimum out of Avant, right? And the highlights and everything else. But, it looks good, right? I don't see a reason why share price should go down from 30 cents to 6. But, yeah, there's other considerations. So you got to dig into these stocks, right? You got to go read the earnings. Otherwise, what's the point, right? I don't think every industry needs research every 3 months. A 3 million graphite explorer, probably gatekeeper, arguable. ADX group once a year is fine in my opinion, as long as you have conviction. Well, it depends though, because you got to build that conviction, right? So I'm the exact same. I don't actually want to be covering Kraken Robotics. I cover Kraken Robotics for the public, right? If Kraken Robotics was a stock in my portfolio, I'd barely ever look at it, like once a year at this point, right? Because I agree with you. Like at some point, a stock gets to the point where it earns enough trust. You've read enough earnings. You know what's going on. News release comes out. You go, good work. Stop watching, right? And then you read the earnings at the end of the year. That's pretty much all you need. So I completely agree. But a lot of these stocks, we're building up conviction in them. Like it's a good question as far as how long that takes, because every company takes a different amount of time depending on what they do and how they do it and where they do it and everything else, right? So if you're building your conviction in a company, yeah, I think you got to go back and look every 3 months. But you're right. ADF group, right? Once a year. Kraken Robotics, once a year, right? We don't need every 3 months. I've started looking into data security companies. With everything going AI and breaches are on the rise. I'm betting that data security will be next to boom. Could be. I'm betting on robotics. I think the people are transitioning. You could see people are even transitioning Tesla into like some weird robotics company, right? I think robotics is next. I agree with you on data security, except the one problem I have with that, I've seen a lot fail over the last couple of years. I was watching BlackBerry. I was watching a couple others that was doing some data security, and they really struggled. I felt like there's a lot of competition in that space, as well as like a lot of these large companies, Microsoft, Google, like they already have a lot of this covered. So if you got to come up as a microcap stock, you really got to find your niche. I don't know if you could find a niche in data security. I don't know. I'd love to have a conversation about this with you. Like if you find a specific niche or a specific company or some specific way that one data security company or several data security companies can find their place in a small market as a microcap and succeed, I'd love to hear how they do it, right? Because all I've seen is some struggling data security companies. But it's interesting. We've been thinking about this for years, right? Diversification is protection against ignorance, Buffett said. It makes a little sense if you know what you're doing. Yeah, that's just it, right? The problem is how many stocks, right? Like we need to take these quotes into consideration. When Buffett said this, how many stocks did he own? 30, 40? Like what does he consider diversified versus a concentrated portfolio? I don't know. I've actually got a Buffett book right there and I don't know, right? So like, is he talking about index investing, right? That's considered diversification. That's protection against ignorance. And I agree, right? For 95% of people or more, like if my kids grow up and they don't want to do this and they don't want to, interpret individual stocks and they just want to put their money in the S&P 500, great, right? That's a fantastic thing to do, right? But at the end of the day, this is what I do because, hopefully I know what I'm doing and I get better returns because of that. So yeah, it's a fascinating discussion. And I think it changes year to year. It changes on different scenarios. I could probably sit here this year and look at my portfolio or look at the stocks that I've covered over the past year. And this year I'll be like, diversification wins out. We all need to have diversified portfolios. And next year it'll be my concentrated portfolio that outperforms, right? So look at the data, it changes. Have you found one that wasn't trading at a high valuation, or do you think the market is undervaluing growth? Very curious. Yeah, I think that's talking about the data security companies, right? Yes, that is richest ninjas. And see, I had the same question, right? I had the same question. It's like AI, data security, everybody. One of the problems with microcaps, penny stocks, is that if something makes the news and it's extremely popular, it's great if you're a day trader, right? Or a swing trader, you can get in there and make money. All you're looking for is volume and momentum and price, and go chase that and make money, because at the end of the day, all that matters is we make money, right? But if you're looking at like good company with good fundamentals at a good price, GARP investing, right? Can slim investing on a little bit of strength because the company is putting out good earnings, and it's really hard to find a data security company that I'm interested in. It's really hard with my investing strategies to find a good AI company that I'm invested in, like would be invested in, right? It's just too popular. These stocks, these companies are too popular. Overvalued, limited growth. Everybody's looking at the story. The earnings aren't matching the story. It's not making sense. It's too difficult. When a stock's too difficult, it's not something I'm interested in. I mean, look at boring. Beware Holdings, up significantly. All right. Well, Cal Nano isn't really boring, but I mean, a lot of the boring stocks this year, Symmetrix just keeps going up. Boring company, right? Boring, boring, boring. You've said a few times the majority of your portfolio is indexed with your high returns with the small caps. How do you resist not going all in? Well, you can't, right? I have my RRSPs, I got my retirement, I got my kids' college fund, right? Microcaps are your disposable income, money you can afford to lose. Look, there are people that will go all in on microcaps, right? And maybe if I was in my 20s, and this is not saying I would, not saying anybody should, right? But now I'm 43. My kids are, I'm not going to say their exact ages because you never know who's watching, but they're older teenagers at this point. I need money for college. I need money for things. So microcaps are great. I can typically outperform in microcaps every year, but I think it would be different outperforming if I put everything I owned into them. I think the stress would kill me and it just doesn't make sense. Like I'm sure there's some microcap investors out there that would do it, but for myself, I'm not at that level, right? So, I've got my retirement money, I've got college money, I've got my emergency fund. Microcaps are my disposable income, and if I can take that disposable income, and if I can, instead of buying shit I don't need, put it in a trading account, and then trade that to make money, and go on better vacations or do something like that, that's typically what I'm doing, right? And I do make a significant amount of money with that, but no, I couldn't go all in at this point. Not at 43 with kids going to college soon, right? Negative gross margin, that's funny. Mitch Buffett didn't invest in publicly traded microcaps unless he bought them out. With high volume megacaps, I don't think diversification is as important. Yeah, I'm not going to get into a Buffett discussion here right now. It's interesting because he's quoted a lot for microcaps, saying that, outperformance in these tiny stocks is the place to be. And, I agree, but it's hard to transition a lot of what Buffett says to today because it's just changed so much. Like he existed in a different time where people were reading about stocks through the newspaper and they were ordering quotes by mail, like as far as earnings were coming by mail. And it was such a different time back then, right? Less education, less access to information, less access to online education if you don't have a formal education. Like it's just, the Buffett world is such a different world than it is today. So as much as I love the guy and read the books, it's hard to transition what Buffett did to today, in my opinion. Invest in boring healthcare. Well, I hope with Well Health Technologies, right? Vital Hub's already up massively, right? Vital Hub's done extremely well, and that's very much the focus on 2024, which is profitable, growing, tiny company, right? Good cash flow and everything. Vital Hub kind of fit that mold, whereas Well Health Technologies, high debt load, red flags everywhere, right? So they've struggled a little bit more. Once we get a little bit more risk on in the markets, Well Health should do well. But it's interesting because boring healthcare, you talk about AI, you talk about robotics. A lot of these companies are merging everything nowadays, right? Like, if Well Health Technologies was a tech company instead of a healthcare company, it's actually legally, it's a healthcare company for Well Health Technologies. If it was a tech company, I wonder what the price would be, right? If you look at HealWell AI, which is rocketed up in share price and is owned by Well Health Technologies, like 49%, just rocketed up in share price. Why? AI, tech company, a tech company in healthcare. Whereas Well Health Technologies is a healthcare company with some tech. And so, HealWell AI is going like this, and Well Health has been going like that. So it's fascinating. Are you confident you can predict future investor sentiment for individual microcaps? Never. Never. You can never do it. You can sometimes get it right. I talk about being right about 51% of the time. If you can do that, that's fantastic. Typically, where I have the best luck predicting future investor sentiment, again, and one of my major investing styles, it's worked over and over and over again on this channel, you can see it, is for the non-business related fear, right? Well, that's what I'll see when you talk about predicting future investor sentiment. I see fear for the dumbest things, share price going down for the dumbest things. It's got nothing to do with the business. It's got nothing to do with financials, earnings, guidance, nothing. There's something that happens. Insider sells a little bit or something like that, right? Something happens that just scares people. It's got nothing to do with the business and everybody's terrified and runs away. I can't predict that investor sentiment is going to change quickly, but I can typically predict, I'll sit here and say, look, we're going to be sitting here a year from now. They're going to have grown 40% revenue. They're going to have grown 30% earnings. They're going to be cash positive and profitable. I'm pretty sure that shit's going to change investor sentiment. And I don't care if people are afraid of this kind of dumb thing today that's got nothing to do with the business. As long as the company can do what they say they're going to do, yes, I can usually predict investor sentiment, right? But sometimes it just gets out of control. Big fair bids at $6 and under. Yeah, Lost Landmark still cashed up. Why send your kids to college when they can do marijuana call edge? Place calls with edge you get from smoking pot all day with dad. it's what? I have no idea. In marijuana stocks, obviously, right? Not me, buddy. I don't have any convictions or addictions or nothing. How do you think I get all the time to do this? Don't watch TV, don't drink alcohol, don't do anything, right? I do stocks. That's it. Not exactly a micro stock, RBRK, and has plenty of its own red flags, but it has strong revenue growth and is also backed by Microsoft, just waiting for the next earnings report. I guess this is one of the data security stocks that we were talking about. Interesting. I will definitely check it out. Thanks. And with that, I think I'm going to check out. 58 minutes in. My last live stream was longer. Sometimes I've been going for like an hour and 10 minutes and I just absolutely lose my voice. So unless people have some last minute things, I'm going to do the screen of death. And yeah, I'll probably end it here. I mean, fascinating week, interesting week anyway, right? Like at the kind of middle of the year, we're sitting in July. Yeah, great returns for Kraken Robotics. Well Health Technologies finally showing a pulse. Gatekeeper has earnings coming up at the end of July. Enterprise Group, if you're looking at the Royce investing method, is probably one of the best stocks on this list. Gatekeeper Systems is shitting the bed, but hey, they finally put out earnings, so maybe that can change. But at the end of the day, of all the stocks that I've covered on this channel in 2024, they are outperforming, assuming you take out the bearish stocks, but the stocks that I've been bullish on are outperforming my top 5 Canadian stocks by double, partially because of the flexibility, because I change them, every 3 months. I can kind of rebalance those stocks. So absolutely fascinating. Getting a lot of volatility in the markets right now due to the low volume, and people panic selling, panic buying. At the end of the day, nothing's really changed for me. I'm kind of a long-term buy and hold investor. So I still got my list. I really haven't added anything to my top stocks list lately, except I'm keeping all these portfolios that I'm tracking different stocks, like cheap stocks right now, maybe some marijuana stocks. I got a list of international stocks that I'm quite interested in. So yeah, you're welcome for the stream. Thanks for watching. Again, if you're still here at this point, please don't forget to give me a thumbs up. Have a great week investing in microcaps. Let me know how it goes. I hope you're making money. I hope you get the next Cal Nano stock that's going to rocket to the moon. And thanks for your time. Really appreciate it.